Today we're discussing the case study of a UK resident entrepreneur moving to Switzerland. I'm joined by my two guests, Matthew Barrett from Bellecapital and Lisa Cornwell from PwC here in Zurich. Welcome to you both.
Hello, David.
Hi, David.
So we're going to set up the scenario in a moment, but before we get to that, I'm going to invite my two guests to introduce themselves, starting with you, Matthew.
Hello, I'm Matthew Barrett. I'm a Senior Relationship Manager for Bellecapital based in Zurich, and I mainly focus on UK connected clients.
Thank you. And Lisa?
Hi, David. It's Lisa Cornwell. I'm a partner with PwC in Switzerland, and I lead our private business. So that's individuals, families, family offices, and any of their tax or broader reporting and data management issues.
Fantastic. So I'll just set up the scenario now that we're going to discuss. John has been living in the UK for the past 25 years. He is married and has 3 grown-up children, all living in the UK. The youngest has just started her second year at university. John owns a business that they're looking to exit valued at £25 million. He has a family home in London worth £5 million. He has also settled a trust 10 years ago for £10 million, and it now has a value of £17 million. He has liquid assets of £20 million. They are looking forward to the next chapter in their lives and decided to move to Switzerland to enjoy the clean living before their grandchildren come along. So Lisa, just to come to you first on some of the tax questions.
Yeah.
John's got to prepare for exit. There's a substantial asset base there. How should he go about looking at it from a UK tax perspective? What are the things he should be thinking about?
So there's quite a lot to unpack there, I would say, and you might not be surprised. This is the kind of thing that we've been having conversation with a lot of clients about recently. I think the first thing, if he knows he's going to leave, is making sure that when he leaves is clear and that date is fixed. We see very often people thinking they've left and haven't actually, and have a tail when it comes to actually leaving a country. When it comes to his business, I think then we'd also be saying, well, at what point is he thinking to sell? And in the meantime, what will he be doing in connection with his business, and where will he be doing that? It's quite easy to create a taxable presence if you're the owner and the manager and you're working for that company in a different country. That's a tongue twister. And so that's something that's important to work out, is what he's doing and when might a sale take place. And then another point that we would often consider in this scenario is that sale going to happen while he's still UK resident, or will it take place once he's exited the UK? And obviously that's why the date of leaving is really important, because if you're planning to sell after you leave, you want to make sure you really have left. And it's maybe worth kind of putting on the table, in Switzerland there isn't capital gains tax in most cases, real estate aside generally. So it might be an option to be relocating into Switzerland and then sell at a later date. And then also we'd need to look at, well, how long is he going to be out of the UK? Because if he goes back in again, that could easily trigger tax on his return. So we'd need to get under the bonnet of the kind of longer term plans. You know, if they move here and don't like it and they miss London, will they go back? But that's something we would look at. Obviously, if they're selling in the UK, if we're looking at the UK tax considerations, we'd be looking at trying to figure out exactly when that crystallises, what the tax liability is, just to give a very clear comparison for them.
And record keeping and day count is important here as they straddle these different regimes.
Absolutely.
Yeah.
And a lot of the time our clients get confused around which day counts where. And we have different rules in different countries. So in Switzerland, if you're here in the day, that's a day to count. Whereas in the UK, you have to be there at midnight. So making sure you keep track of that is important. There's tons of apps on the market, but you can also just use your calendar or your Excel. It doesn't need to be over-regged, but it happens quite often, doesn't it? That people just get that day count wrong and accidentally trigger tax somewhere that they just didn't mean to do it.
And is it fair to say also you're having more of these conversations at the moment with the changes in the UK to non-dom? Just generally you're seeing an uptick in people looking at options offshore?
Absolutely.
Yeah.
And I would say it's not just the UK. We see a lot of people considering their options for different reasons. You know, Americans looking at leaving, all over the place, but definitely right now we see an uptick in that.
Absolutely. And so just from the Swiss perspective then, how should he prepare for a move to Switzerland? Many will know that the cantonal arrangements are different. How do you start advising or having a conversation with someone like John to decide where might be suitable?
So I think when it comes to moving to Switzerland, a big starting point for us is, Do you have a bias towards language or lifestyle? And what are the important things to you? So some of our clients might say we need to be no more than half an hour away from an international airport. So not a private airport, it needs to be international. So that already narrows us down. Some will say, I want to be in French speaking. Some want to be in the Italian side. So we actually start with the non-tax considerations. And then we think through, well, when you're here, what will you be doing when you're here? Because if you're going to work, then we need to figure out from an immigration perspective how to move you into the country. Because post-Brexit, we don't, as Brits, have the automatic right, unfortunately, to come to Switzerland. And then the tax follows from that. And in each canton, there are slightly different rules. And even within the cantons, we see different tax as well. So we go down that path. If, on the other hand, and in John's situation, I'm not sure it would be quite right, if he's going to continue working, he couldn't do this route. But we have the lump sum taxation, which not all cantons offer, but is a really nice way to come into Switzerland. If you've not been Swiss tax resident before, if you don't plan to work here, you can pre-agree a tax amount with the canton and then come into Switzerland, and that deals with immigration and tax together. So it's two big ticks. So it really depends, I think, with this case, what John's going to be doing with his business, if he stops as soon as he leaves the UK, or if there's likely to be some kind of lag. And then I think the final question is, where do we think there's a good tax deal to be had? Because the cantons do have flexibility to an extent. Cantons that are typically very popular on an ongoing basis for both normal and lump sum taxpayers are places like Zug, Canton Schwyz, because you're quite close to Zurich still. And then in Geneva, all along the Riviera in the west side of Switzerland is very popular. So Geneva, Vaud and Valais. The tax authorities there tend to be maybe a bit more active in asking questions around what you're going to be doing. But we see all of those places as very popular.
Thank you. And Matthew, just to bring you in from your experience working with clients relocating in, aside from the tax questions, how do you see them making a decision about where to live? As Lisa said, it's got to be beyond tax. But, you know, for those who've made successful relocations, what's your observation?
I mean, from my perspective, you should never move just for tax, but clearly it's a big driver. Otherwise, you won't stay where you've moved to maybe long enough to settle in. And the usual spots that I see are mainly the mountain regions, which is in Graubünden, St. Moritz, Zermatt. Verbier is very popular for Brits. There's a huge sort of diaspora up there and have been for many years. I mean, Switzerland has such a close connection with the UK, even from the royal family being in cloisters. And a lot of Brits founded these ski clubs in the mountains for whatever reason, but they did it. So there's a big connection, but language is a big driver. And I think maybe just natural connections to even the French side of skiing. People went through Geneva on the way, and that can also be a draw. But then you see people moving to the German-speaking parts as well.
Thank you. And Lisa, so there's a trust in the background that we mentioned in the setup. What should what should John be thinking about that in respect of his move to Switzerland?
So we'd need to look at which basis of tax he was thinking of coming into Switzerland. And alongside that, we would then be reviewing the trust, because in Switzerland, there is no trust law. So what we need to look at is, how do we think the Swiss authorities would treat that trust? Do they see it that it really is a separate entity to him? Or do they say, well, actually, you're still involved in the decisions on this structure. You still take money from this structure, and therefore the income and wealth that's being generated in the structure is actually on you. So we have to look at that quite carefully. And we would quite often actually approach the authorities proactively and get a ruling so that there's some certainty around the position. We've had some pretty strange outcomes where there was one trust it was a dynastic trust set up many years ago, and the person who was relocating was a beneficiary but had a fixed entitlement. And so from her perspective, she got a very, very small amount of the income that was generated each year. But from the Swiss authorities' perspective, there were only 4 fixed beneficiaries. And it didn't matter that all of the income wasn't being distributed. Their starting point was 1/4 of the whole thing was allocated to her. And we did agree a different position in the end. But it's that kind of thing, how the individual might think about the the structure that they have doesn't necessarily map once you come into Switzerland. And obviously we all know that the UK rules around trusts are pretty tricky anyway. So we'd want to also make sure that we understood what the implications were. Since April, we have the new long-term residence rules, which I think are good because they give you more certainty than the old rules around domicile. But at the moment, if this structure was set up a long time ago, which I believe it was, then we need to keep thinking about how the UK rules apply for quite a long time going forward.
Or if owning UK assets, there's lots of things that could come into place, and careful analysis would need to be looked at for the structure.
Exactly. We like to map out everything there is and then kind of figure out in both jurisdictions where we think there might be not an issue, but something to work through.
And zooming out, I mean, beyond the trust, there's liquid assets, there's family members now in the UK. What would the broader succession plan, or what are some of the questions you'd kick off with looking at that piece to advise the family more holistically on succession?
Yeah, I think a lot of the time, again, coming into Switzerland, we'd be looking at which canton they were coming into and on which basis of taxation they were coming, in terms of when making gifts might make sense, and overall kind of what their actual ongoing position and needs would be. We also have, there's a vote at the end of November in Switzerland. It's not relevant for John, but it would bring in 50% tax on assets over 50 million. So for quite a lot of clients, that's something we've had to consider as well. The broader succession piece, I think it comes to the basic things that we always are asking clients around what's your plans and intentions overall. So the business, they want to sell it. So then what happens next with those assets? What assets are there? Is the house something that you want to sell, or is it an asset that you see as a family property going forward, and who will have those things? And then the tax is kind of the last piece of it. So in the UK, we don't have an immediate gift tax for the assets held directly. Moving into Switzerland, there could be, depending on the canton. So we'd need to just look through, if you're going to make a gift, when makes sense. And then we're back to all the same old good old things of when are you leaving, when do you arrive? So
and also, I suppose it's bringing the adult children into the conversation. How much do they want to give when? How much they want to involve them in the process of having and managing wealth. If they sell the business, they've got substantial liquidity there. Yeah. Educating even before receiving control, isn't it?
Exactly. And I think that's very often the piece that is kind of given less attention, because the focus is on what's the cost of doing it and is there a tax cost. But actually, if you haven't agreed that already, it can lead to assumptions that might not be correct. So an assumption might be, well, we're selling the business because none of the kids want to be involved. And actually one of the kids does want to be involved. Or we're going to sell the house, you don't want the house. And then one of them says, well, I want to rent it out as an Airbnb, whatever. It's having those early open conversations is really important. And I actually think a relocation is a really good time to bring it up, because a lot of the time these can be quite difficult emotional conversations. But by kind of blaming it on the fact that you're moving, it takes a bit of the heat away, because it's a different context that you're bringing it up.
And on the London property, I mean, taxes on London property or UK property has changed a lot over the last few years. What's the way that, as a Swiss resident, they should think about owning the property? What are the options, or what do you see others doing?
Well, I would say there's a big caveat here. We are expecting some changes to how property is taxed later in the year in the budget. But I mean, the first point we would be looking at is, if you're going to sell it, we have PPR in the UK, so the gain is exempt. Once you have been here for 5 years, not all of the gain will be exempt. Although I guess you would tell me, as my investment friend, we would need to check if there was a gain or not, depending on where the market's gone at the moment. And then we'd be looking at if you rent it out. And again, we're back to the question of, are you a lump sum taxpayer? Because if you're a lump sum taxpayer, we don't really care about your income outside of Switzerland anymore. So it's again kind of it's like a game of, I always say to clients, it's like a game of Tetris. So you've got all these pieces and we need to try and fit them together. But as Matthew said, we're never saying do anything just for the tax. It has to be what makes sense. And it might be right now that the value of the property is depressed. So there's no point selling something so you don't pay tax if you lose money by doing it. I mean, it's the best tax planning, right? Lose money. But that's not in the real world what people tend to want to do.
Fantastic. Thank you, Lisa. So, Matthew, just to bring you in on look at some, we've heard a lot there about on the tax, the broader wealth planning, just turning to the investment piece. With that £20 million substantial portfolio there for John, he's going to move from the UK to become Swiss resident. How does that affect the way that you'd construct the portfolio and think about running the money?
Well, it's a fantastic opportunity for the client, and that's a typical case that we see. And Lisa mentioned that there's no capital gains tax in Switzerland, and actually that can be the trigger to reset the portfolio. Depending on what positions he has in there, maybe he's built up a single stock position that was overly large. It can be a blank canvas for us as asset managers to be able to decide where to put the money. That's very, very useful for us and a nice starting point.
And just also, we mentioned, the business exit, so there's substantial liquidity to add. So how does that kind of impact the picture? There's no sale on the table, but it could happen imminently. And then how would you go about thinking about the portfolio with that in mind?
I mean, you'd have to assume that the sale would be after he left the UK, because otherwise, why would he do that if he can do it? It is a large amount of money. There is a trust there, so you'd have to say, well, you've got the initial amount of money that needs to maybe be rebased now that he's arrived. He was a sterling-based investor. Does that then have to change into Swiss francs? Does he need Swiss franc income? He's a very wealthy person. He doesn't need income per se, but maybe he wants income to live on a day-to-day basis. So that can have effects on the portfolio construction, because the reference currency would generally drive your fixed income allocation. So you've gone from UK bonds to maybe Swiss franc bonds. At the moment, they pay nothing. So then, well, actually, why would you want Swiss franc bonds? So that might drive up your equity allocation to a higher level than you historically didn't have. So that can be part of the construction. Then you have a big sterling windfall, but you live in Switzerland. So for us, we then would look at the cycle in the market. Where are the indices, how expensive things are. But normally when we speak to clients, or I do, it's about averaging in and pound cost averaging in over time. So it could be a quarter, a month for a year. It could be a longer period. But when you have those windfalls, there are bigger questions of, are you going to buy another property? Is there another luxury asset that you want to own around the world? How much will be left? Will any of that money go into trust? Thanks to Lisa, she'll advise that.
Not yet.
Can any money go in? What position would that be? So the currency can be a big driver.
And the deployment there is gradual, so you're kind of like just going at a certain speed.
Normally to smooth the returns. I mean, especially with the whole AI boom we've had, no one wants to ever enter at the top of the market, but to try and buy on a dip never really works, because when you're in the dip, you don't know you are, and you think it's going to fall further, and then the bounce will run away from you. I mean, that happened April this year when President Trump announced his Liberation Day. We had a sharp drop and then a huge correction, and now we're way above where we were. So averaging in can just smooth that volatile period. Clients generally feel a lot better when they do that.
And do you invest globally? I mean, do you look at, you cover all major markets, as it were, and although he's based here in Switzerland, we
are a global equity house. So we have, and we invest in companies all over the world. We do have a Swiss equity expertise because we're Swiss based. We have very good Swiss strategies. That's something that then we would talk to Lisa about, because you mentioned a lump sum. If you then end up buying Swiss equities, there can sometimes be a dividend withholding tax that can add to your tax bill. But say Lisa fixes those problems. And it's such a small issue, it doesn't drive our investment thesis. If we think Swiss equities are a good investment, then we would just buy them. But that is a big sort of string to our bow, that we can have that expertise being based in Switzerland. Three stocks in the SMI make up 50% of the index. So if you invest in Switzerland in an index and one of those three stocks underperforms, well, you could struggle. So we have the flexibility to maybe omit one of those as we see fit. but it's there.
And what about the management of the trust assets? I mean, Lisa, careful analysis needed to look at the tax position. Then with that in mind, how do you go about managing the money inside the trust?
Well, I think for us, the settler aside, the big question for me would be where are the beneficiaries? If the settler isn't a beneficiary, if the beneficiaries are in the UK or Europe or the US, well, that could then drive that the underlying assets remain in those currencies rather than being the Swiss franc investor and having those fixed income issues. But also now that the settler is away, he's got a liquidity event. He clearly doesn't need the money. Hopefully the structure stays in place for asset protection, but your time horizon now is rather than in the next 5 years, could be in the decades. If the beneficiaries are children or grandchildren, this could be a huge legacy pot for those future generations. And that is a once in a lifetime event that you've left the UK to be able to maybe do something very interesting with this money for those future children.
Fantastic. And you've worked here in Switzerland now for a number of years, but you'd also worked in the UK. What's your observations for the environment, the wealth management and banking environment here in Switzerland? What benefit will that give? John, what's the difference between having perhaps money managed out of the UK or what it would be, how it would be delivered here?
I mean, Switzerland has a long history of offshore banking and custody of assets. It's probably it is the largest in the world. I think there's 2.6 trillion assets here. There are other booking centres that are catching up, but the infrastructure here and the bilateral agreements they have for offshore banking, I still think it puts it ahead. Switzerland isn't in MiFID. But it has to be aware of these. That can be good or a negative for a client, and that has to be navigated by an asset manager. But overall, I can't see a booking centre competing with Switzerland yet. There's too much infrastructure built in. It's just too large. Having been in London for 10 years and now in Switzerland for 10 years, I see the difference in the two. Brexit is a different story, but that was a boost for offshore banking in Switzerland. And normally, offshore banking in Switzerland is driven by government instability. And Lisa will know this, having fiscal stability and government stability and safety is why people want to bank in Switzerland and also why they want to live here.
Fantastic. So just as we conclude this case study, John's coming in to see you next week. You've got a few notes in front of you, but what are the sort of things that you would be tabling, the priorities that he should be thinking about? What's the advice you'd give someone who's thinking about this move? What would you be raising with him, Lisa?
So there's probably two, right? Yeah. So there's what's going on with the business. Are we selling it or not? Is this a serious, or is it a navel gazer right now, or is it 5 years? We don't mind, but let's concretely think about that. And then the personal side, how are you going to pick in Switzerland? Let's start by thinking where you want to base yourself, because then everything from those two things I think starts to flow. And then we can look at some of the other stuff like the trust another day when we've had a strong coffee.
Yeah.
Fantastic. Matt, what would your top tip be? What would be the thing you'd table up front with John if you're going to meet him?
Well, first would be where is he going to live? And hopefully he has a nice chalet somewhere so we can both go and visit. But I would say the first part would be, it's tricky because you don't know how long he's going to stay. But the first part would be that reference currency. Maybe that drives part of the asset allocation of his future investment decisions. So the reference currency and the time horizon of those investments would be the first two things I would bring up.
Fantastic. Well, thank you for joining me for this conversation, and we look forward to sharing the content.
Thank you.
Thanks, David.